Hey, how's everyone doing? Excuse me, we're starting up in a minute. Just want to do a quick audio check if the mic is coming in okay for you guys. Oh, New Zealand, thank you. Kia ora. Hope everything out there is going okay. Okay, hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV, our weekly live stream. Glad you folks could make it. It is Super Bowl Sunday. I'm not sure who exactly is winning, what the score is. I know there's quite a bit of news that's been going on, but I do hope you had a great weekend. And let's get going for our work week. Monday, it is Monday morning here in Asia, and again, it's probably Sunday evening for most of you in the rest of the world. So again, glad you could be here. And if it's your first time here, please do subscribe. Go ahead and click on the bell to be notified on updates and give us a thumbs up if you like what we do. We really do appreciate your support. And don't forget, you can find us all over throughout social media. Our website is www.silverbullion.com.sg because we are located in Singapore. Excuse me. Facebook, Silver Bullion SG. Twitter, Silver Bullion PL Private Limited. The audio versions can be found on bit.ly bit.ly/SBTV iTunes or SBTV Spotify, depending on your preference. And join our Telegram group where we go ahead and post items relating to gold, silver, economics, or whatever may be the hot topics that's coming out in the news. And that Telegram group is Crisis Tracker. So if you have Telegram, go ahead and subscribe to our group, Crisis Tracker. So just want to take a quick look at who's out there right now. Joseph Rogers, how you doing? Glad you could make it. Uh, News junkie, super bore. It's not a good game. I have no clue what's going on. I haven't even watched any of it. Um, G Bob Burner. I don't watch sports anymore. You know what? To be honest, ever since I've transitioned over from US to Singapore, I hardly watch sports as well. People should be focused on what's real. Rob P. That is that is probably, I mean, that is definitely the correct thing to say. I think a lot of times, not a lot of times, we are all being distracted from real news or things that matter by so many things. It's just become an entertainment society. Keep people preoccupied, entertain them, and they will never question or see what's going on. But I know you guys are smarter than that, right? Okay, Silver Boy. Bread and circus, that's all it is. Keep slaves distracted. Yeah, doesn't that remind you of that scene from I think it was Gladiator, where basically they were just throwing bread and things like that, and the circus was of course the gladiators in the arena. Kind of seems like maybe in a modern sense, yeah, we're kind of at that sort of getting to that stage, right? Bread and circuses. Um, let's see, grown men play kids games, masses watch. Yeah, well, their salaries are amazing, huh? I mean, professional athletes they get paid some, they get paid quite a bit. Rapi, how you doing? Weme, what's your thoughts about coronavirus? You know what? We're going to get into that. Um, last week we started taking a look at the coronavirus, and you know, it's more than just the virus. I mean, you have that health issue, and of course, you have that economic issue. Not the same one is more important than people. It never is. Um, But when we take a look at China, we found some pretty interesting things that we're going to share later. And a lot of things are going to unfold because of it, and we'll go through some of that. And of course, we're going to go through the Fed. They recently had their meeting, so we'll probably what I'll do is start off with the Fed, and then move over into coronavirus if that's okay with you guys. But first things first, I want to go ahead and check out the silver price, gold price. over at our website, silverbullion.com.sg. And excuse me, if you guys haven't already done so, we do have a free investor kit that you can download here. It's just a PDF. You guys can download it. It's free, and get to know some of what we do. And if it fits your needs or your wants, go ahead and give us a call or contact us, and we'll see what we can do. Surprisingly, silver down below 18. Gold, it's gone down a little as well. And along with that, I think the over in China, one of their markets, I think it went down about 9% or so. But China, they are injecting liquidity. Make no mistake, and they are. I believe they're banning people from shorting the markets. So they're doing everything they can to keep it afloat. Um, the thing is, for now, in fact, let me get to that. Take a look at the ratio really quick. The ratio, it's yeah, back up at 88. I know it was flirting around with getting close to 90 again, but yeah, one of the bigger pieces of news was recently China is injecting 174 billion of liquidity uh, today. So what they're saying is they're going to inject this liquidity into the market via reverse repo. You thought the US, the Fed, was the only ones doing repo. Well, surprise, surprise, there are other banks that are doing repo and reverse repo as well. And they're doing this because of their fears of what's going to happen to the market with this coronavirus and the fear it's going to put in the market. The central bank said it will inject 1.2 trillion won or 174 billion USD worth of liquidity into the markets via reverse repo operations today as its stock markets prepare to reopen amid an outbreak of a new coronavirus. Chinese authorities have pledged to use various monetary policies to ensure liquidity remains reasonable, ample, sounds like Jerome Powell here, and to support firms affected by the virus epidemic, which has so far claimed 305 lives, all but one in China. I just want to get to one more part of this. There was a statement from the PBOC. Let me see if I can find it. Here we go. We believe that the successive introduction and implementation of policy measures will play a better role in improving market expectations and preventing irrational behavior. What is that? What's preventing irrational behavior? In other words, we are going to control the market, not you. Basically, that's the message I get. They're telling everyone we're going to control the market, not you. So again, if you thought the Fed was the only one doing repos, reverse repos, it's all over the place. In fact, I'll show you one quick thing just to make that point clear for all of us. It's not a new thing. If you look at the date here, back in June of 2019, over half a year ago, China overnight repo rate falls to 4-year low as PBOC tries to calm funding jitters. I'm not gonna dive too deep into that. It's just to say that the Fed is not the only one doing repo and reverse repo. You may probably not have heard much about it from other countries, but it's going on in various other places as well. So it just goes to show that it's things are not as good as they are probably being made out to be or made out to look. Okay, take a look at some of the comments here. Let's see, Shanghai down 7.4%. Yeah, I know it was going down a bit. Lone Traveler, yeah, sure. BM Chinese aren't buying it. Take a look at more of the comments. Excuse me, still can't shake this cold. Thanks for the suggestions you guys gave with the orange juice, colloidal silver, and everything else. I'll get over it one day soon, I hope. Let's see. Free fiat money lets them manipulate anything they want. Tom L. Yeah, central banks can manipulate anything they want. Won't last forever. That is true. It's not going to last forever. Something's gonna give, and which is what we're gonna talk about in a bit. Where Everyone's searching for this one black swan, but I tell you what, I think a flock of gray swans would be equally dangerous, if not more dangerous. But anyway, let's go ahead and break down some of the things that Jay Powell said last week.
In particular, we believe the current stance of monetary policy is appropriate to support sustained economic growth, a strong labor market, and inflation returning to our 2% symmetric 2% objective. As long as incoming information about the economy remains broadly consistent with this outlook, the current stance of monetary policy likely will remain appropriate. We will be monitoring the effects of the policy actions we took last year, along with other information bearing on the outlook, as we assess the appropriate path of the target range for the federal funds rate. Of course, if developments emerge that cause a material reassessment of our outlook, we would respond accordingly. Policy is not on a preset course.
Okay, so according to Jay Powell, things are okay. No need to change anything unless we need to change anything. Uh, Support sustained economic growth, strong labor market, inflation returning to what he says that's their 2%, not ours. We like having things cheap. We don't like inflation, but they want it. So inflation returning to our or their 2% symmetric objective. Those were some of the things he said. One comment out there I saw from where did it go? Joseph Rogers. Um, Conspiracy theory he's bringing out. But I admit I kind of thought about something like this as well. Um, China's he's calling it a false flag, allowing coronavirus to take hold. Hang on, let me bring this up. Allowing coronavirus to take hold injects liquidity to stabilize markets, creates liquidity injection worldwide, and starts the fall of fiat currencies. I've heard, I've kind of been hearing some of these things as well, but it's extreme for sure. But you just don't know what's going to happen. Like I said, there's a flock of gray swans could be equally as dangerous as that one black swan. So I just wanted to bring that up because it does show where people are starting to go with this, what they're starting to think. But main thing, let's just hope this thing does get under control and people do get better. But at the same time, experts can and often are wrong, and we're also gonna touch on that in a bit. So those were some of the things Jay Paul said, and he also talked about his 2% inflation.
Inflation continues to run below our symmetric 2% objective. Over the 12 months through November, total PCE inflation was 1.5%, and core inflation, which excludes volatile food and energy prices, was 1.6%. Available data suggests similar inflation readings for December, though we expect inflation to move closer to 2% over the next few months as unusually low readings from early 2019 drop out of the calculation. While low and stable inflation is certainly a good thing, inflation that runs persistently below our objective can lead longer-term inflation expectations to drift down, pulling actual inflation even lower. In turn, interest rates would be lower as well, closer to their effective lower bound. As a result, we would have less room to reduce interest rates to support the economy in a future downturn, to the detriment of American families and businesses. We have seen this dynamic play out in other economies around the world, and we're determined to avoid it here in the United States.
Okay, so he's getting worried about that 2%. He's saying it's too low. Long-term inflation expectations will drift down. Actual inflation will go lower. Interest rates will be lower. As a result, we would have less interest. As a result, we would have less interest rates to support the economy in a future downturn to the detriment of American families and businesses. What he's saying is, typically when a recession hits, the Fed needs to drop interest rates by 4 to 5% at times. And what he's saying right now, when we're at, I believe, 1.5, about there, there's nowhere to go but negative. So that's his concern. That's his real concern right now. So is Mr. Powell, is he saying we're one recession away from possibly forever being locked into negative rates? And when we go ahead and we take a look, excuse me, when we go ahead and we take a look at the effective federal funds rate, or the interest rates. Let me stretch this out a little. Okay, hang on. Let me just stretch it out. So again, we kind of sort of went over this in the liquidity crisis, liquidity trap, sorry, live stream, where each of these gray vertical bars represents a recession. Okay, so every time you see those gray vertical bars, it means there was a recession. And when we look here again, uh, we were at, let's see, this one we were at about 3.5. We took it all the way down to 0.25. So that one needed about 3 percentage points. Um, I'll come up here again. So we were at roughly 8. We went down to, let me get it there, 3. So again, that was 5. So here at the highest point in the recession, it was here 11. We needed to come down all the way to 3. I mean, it just goes to show whenever you look at these gray bars, you see a pretty large um, dip where the interest rates need to come down. So we're here at 16.83, comes all the way down to 9.4. Sorry about that. This mouse is kind of doing its own thing. But anyway, we are here now. Sorry, let me stretch this out. And what he's kind of talking about is now we're here. And the last one we had, 2007, we were at 4.58, and we pretty much went all the way down to 0. So that needed over 4. So we're here today, right now, 1.5. The thing is, if we go down that 4 to 5 points again, uh, 4 to 5%, we're in negative territory. And that is what Jay Powell is talking about. He has this fear that we're going to go down into negative territory. And then he also touched a bit on repo.
The plan the FOMC announced back in October to purchase Treasury bills and conduct repo operations has proceeded smoothly and has succeeded in providing an ample supply of reserves to the banking system and effectively controlling the federal funds rate. In light of the resulting stability in the federal funds rate and money market conditions more generally, we decided to make a small technical upward adjustment to administered rates to ensure that the federal funds rate trades well within the target range. This action reverses the small downward adjustment made in September when money markets were volatile. As our bill purchases continue to build reserves toward levels that maintain ample conditions, the role played by active repo operations will naturally recede. Over the first half of this year, we intend to adjust the size and pricing of repo operations as we transition away from their active use in supplying reserves. This process will take place gradually, and as indicated in today's FOMC directive to the desk, we expect to continue offering repos at least through April to ensure a consistently ample supply of reserves. Based on current projections, we expect that the underlying level of reserves will durably reach ample levels sometime in the second quarter of this year. As we get close to that point, we intend to slow the pace of purchases and transition to a program of smaller reserve management purchases that maintains an ample level of reserves without the active use of repos. At that point, as in the pre-crisis period, our balance sheet will be expanding gradually over time, reflecting the trend growth in the demand for currency and other Federal Reserve liabilities. All of these technical measures are designed to support the efficient and effective implementation of monetary policy and are not intended to represent a change in the stance of monetary policy. We're committed to completing the transition to our longer-run ample reserves regime smoothly and predictably. Of course, we will continue to closely monitor conditions in money markets, and we will adjust these plans as conditions warrant.
Okay, yada yada yada. You guys know the rest, and yes, he is wearing that lavender colored tie. So we all know what that means, right? Whenever that lavender tie comes out, you can't really trust what comes out of uh, Chairman Powell's mouth, what he's going to say, because he seems to be always backing up or turning left and right on whatever he says. So beware of that purple tie. So what he had to say, the role played by repo operations will naturally recede. We thought that was supposed to happen last year. It was temporary, right? So now it'll naturally recede. That's, I guess, a new word for temporary, right? Um, Intend to adjust the size of pricing meaning they don't know. They may have to throw more money in it, but hopefully not. Transition away from their active use in supplier reserves, offer repos at least through April. And I think all of us here know why he threw in that April, because last time around, he told us initially it was because corporate had to go ahead and do their taxes for the fiscal year. Well, obviously that wasn't true. So here we are again. He's saying April. I guess he's trying to tell us tax time again without saying tax time, because we know it didn't sit well with us last time around, right? And he's saying the balance sheet will grow again. So April, come on, Jay. I mean, you already laid that one on us. You told us it was about taxes back then when it all first started, which reminds me of this guy and his quote.
There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on, shame on you. If fool me, we can't get fooled again.
Can't get fooled again. No, we can't get fooled again. Anyway, yeah, hopefully Mr. Bush is doing okay. He gave us a lot of I would just say it, he gave us a lot of comedy during during his time with all these Bushisms and everything else. But let's see. Debt is a fact of life. It doesn't matter how you spin it. It is the fact of life because we are in a debt-driven economy, which probably shouldn't have been that way. Anyway, Rolf Steiner, the table is tilted, folks. The game is rigged. George Carlin, absolutely, absolutely. Let's see. RR temporary, like Nixon said about leaving the yeah, that was supposed to be temporary, right? We're temporarily closing the gold window. Don't serve the U.S. empire of debt bombs. Unfortunately, yeah, I mean that dollar needs to be protected. Reserve currencies usually they don't really die off too well. It's usually number of events that have to push a reserve currency out of the way. Kaui Kanekoa, aloha. Shields are made of metal, not paper. Exactly, exactly. I think Lynette Zhang, she makes a good point of that as well. Uh, Funny blast. Yeah, Bush, he had a lot of, excuse me, he had a lot of things to say. Don't worry, I don't have Wuhan. I've had this cold for over a month already, so don't worry. And I do have mask if I go out, so don't worry, guys. It's all good. Um, let's see what happened to physical possession of precious metals. Um, Physical possession. You should have physical possession. You should keep some on you, and you definitely should keep some out of your jurisdiction in a safe place. You don't want it all to, my opinion, you don't want it all to be with you. And again, this isn't financial advice. Everything I say is just my personal opinion. It's not financial advice, professional or otherwise. So let's just be clear with that disclaimer. Um, Gold is money. Max headroom, absolutely. Gold is money. Um, Definitely money. Everything else is credit. Absolutely, absolutely. So J. Paul, he was talking about his repo, and then or he had a speech at the FOMC, and then the floor was opened up to reporters, real reporters who had some questions, and I'd like to share just a couple of them with you.
Thank you, Nick Timmeros of the Wall Street Journal. I want to ask about the balance sheet. How many reserves are ample? How many reserves does the Fed now think it will need to conduct policy in its current framework? And can you walk me through how you and your colleagues are arriving at that answer?
Sure. So thanks for that question. Why don't I say a few things about repo, since I know that'll be of interest. So just to bring you back, after last September's brief turmoil, we took prompt and decisive action, and as a result, money markets have been operating smoothly since then. Just to review, those two adjustments were Treasury bill purchases of at least of 60 billion, at least into the second quarter, and term and overnight repo at least through April. And I will get to your specific question. The purpose of the adjustments has been to assure that our policy is transmitted smoothly to the federal funds rate, which requires well-functioning money markets. That doesn't mean we're trying to eliminate all volatility in the repo markets. We know that some volatility is normal and expected in well-functioning markets. And as I mentioned, these adjustments have been successful in supplying an ample quantity of reserves. Money markets operated smoothly, including right through year-end, and the Fed funds rate has remained in our target range. So we will know when these adjustments have run their course, when reserves are durably at a level that enables us to control the federal funds rate using our administered rates, interest on reserves and reverse repo, without the need for frequent use of open market operations. Based on current projections, we expect that the bill purchases will durably bring the underlying level of reserves to the ample level sometime in the second quarter of this year. And when we see that we've reached that level, we'll begin to gradually reduce our asset purchases to the level of the underlying trend growth of demand for our liabilities. As our bill purchases bring the underlying level of reserves up to an ample level on a sustained basis, the necessary quantity of overnight and term repo will gradually decline. We've already begun the gradual reduction in the quantity of repo, and we'll continue to reduce those offering amounts gradually as conditions permit. At some point, we'll also raise the minimum bid rate. Even after we reach an ample level of reserves, it's possible that repo operations might play a role as a backstop and support effective control of the federal funds rate.
Okay, I'll stop them there. I think you guys get it. You know, reading the comments that you guys have, I mean, I gotta say, you know, when it was Ben Bernanke, I my own opinion, I felt he was a bit arrogant. When it came to Janet Yellen, I felt she was also a bit arrogant. When it comes to Jay Powell, I don't find him as arrogant, but I do find him as he's just gonna tell you what you want to hear, but you probably will never get the truth out of that guy. He'll give you bits and pieces of truth, but seems like you're never gonna get the full truth. But I don't find him, you know, being arrogant in any way, but it's just that he is not really being forthright with everyone. So again, past three Fed heads, none of them really have been for the people, or have been genuine with the people. So, you know, again, I think you guys know already, the Fed is a private corporation. They're not beholden to us. They have their own shareholders, stockholders. They have their own deal. So last three Fed heads anyway, I did find them to be a bit disingenuous. Nonetheless, ample reserves, again, that word, we keep hearing it. What is ample reserves? Um, the level should be reached by second quarter this year, no lower than around 1.5 trillion. So that's their definition of ample reserves. They need to have 1.5 trillion. Why this 1.5 trillion? That's a number I think, you know, is kind of sticking out. Why is he looking at 1.5 trillion? And then we have Steve Leisman also ask him a question as well regarding these things.
Steve Leisman, CNBC. Mr. Chairman, thank you for the question. Following up on Nick's question, I know you said it's not QE, but it's $390 billion over 5 months, which is a lot to expand the balance sheet. I guess I'd ask one more time on Nick's question, is there a number that you have in mind? Secondly, a lot of people in the market are sort of concerned that it looks like QE and they're trading that way. Are you concerned that the market is embracing this like a QE program and that the rise in the stock market is linked to it and you may then experience something of a taper tantrum the way Chairman Bernanke did when he tried to roll it off?
So I'll just I'll repeat that we think that we we need to continue purchases until reserves are at a level at which they will not go below $1.5 trillion roughly during the course of the calendar year, and we know that the TGA will move up and down. So they'll be much higher than that sometime. But that's kind of the number, and we think we'll reach that sometime in the second quarter. That's our estimate, but we'll know it when we get there. We'll know it because we'll be able to control the federal funds rate without active use, ongoing use of open market operations. You know, our intention of these for these adjustments is just to raise the level of reserves and to allow us to conduct monetary policy in an efficient and effective manner, and that is our sole intention. I pointed out on other occasions more than once the differences, the really specific differences between this and the large-scale asset purchase programs. We've been over that. In terms of what affects markets, you know, I think many things affect markets. It's very hard to say with any precision at any time what is affecting markets. What I can tell you is that you know what our intention is. It is to return reserves to an ample level. We expect that to happen during the second quarter. And our plan as we do that is as those purchases get to that level, we believe we can gradually reduce them, and we believe we can also gradually reduce repo as we reach an ample level, as we're satisfying demand now more from underlying reserves from bill purchases rather than from repo. And again, last thing I'll say is we're prepared to adjust the details of this plan, as we've shown ourselves willing to do, depending on conditions.
Gina.
Okay, so I saw one comment out there. I agree where I do think Jerome Powell came into this position with the best of intentions, but the job just dictates that you cannot be fully honest with the people. So for that, I do have a bit of empathy for Jerome Powell, but still, nonetheless, uh, we're not being told the truth. So it's something that again we all need to be aware of. Um, so some things he had to say again: is this QE, and is the rise in the stock market linked to it? Need to continue purchases will not let reserves go below roughly 1.5 trillion. So again, he's sticking to that 1.5 trillion, and I think we have a good idea of why he's using that number, and we'll take a look at that shortly. But Paul never really said if the rise in the stock market is linked to the not QE. So let's take a look at two things: why they won't go below 1.5 trillion, and what the old Jerome Powell said. What the old Jerome Powell said. So this article is coming from, I believe, Zero Hedge. When it pops up, yeah, Zero Hedge, which I think, as you guys know by now, unfortunately was, I believe, permanently banned from Twitter. I don't like that because I think Zero Hedge, sometimes they were sensational with things, but still they gave a lot of good info. And Twitter banning Zero Hedge, I think it's a shame what they did with that. Um, but anyway, this was dated this year, mid January, and it goes on to say that last week we found out that Dallas Fed President Kaplan knows that the Fed is creating excess and imbalances in stocks. Yes, bloating the Fed balance sheet by over 400 billion in 4 months has a massive impact on stock markets, and billions of repo liquidity unleashed each day can be seen impacting the daily action as well. So Dallas President Kaplan, he kind of answered Steve Leisman's question, and I guess Steve Leisman wanted to get it straight from Jerome Powell, who did not give him a straight answer. Article goes on to say, of course, he doesn't have to because the crack reporters never confront him on the issue in his post Fed meeting press conferences. Bubble away, accountability free. Why bother asking the hard questions? That may just get you disinvited from the next press conference. Too strong of an assessment. I let you be the judge. But why are the hard questions not asked when it matters? So again, Leisman asking that question. Do appreciate it. So let's just go on a little bit. Powell knows exactly the behavior he's instilling in investors, the artificial levitation of asset prices, and the disconnects and the dangers it poses. So this is taking a look at some of the things Powell had to say back in October of 2012, and there are minutes to it which you can find here by clicking on that link. But this is what he had to say. I have concerns about more purchases. As others have pointed out, the dealer community is now assuming close to a 4 trillion balance sheet and purchases through the first quarter of 2014. I admit that is much stronger reaction than I anticipated, and I am uncomfortable. Got it? I am uncomfortable with it for a couple of reasons. First, a question: why stop at 4 trillion? The market in most cases will cheer us for doing more. It will never be enough for the market. Are we getting this? It will never be enough. Our models will always tell us that we are helping the economy, and I will probably always feel that those benefits are overestimated, and we will be able to tell ourselves that the market function is not impaired and that inflation expectations are under control. What is to stop us other than much faster economic growth, which is probably not in our power to produce? So, those are words from the old Jay Powell, that's how he felt. He had concerns that they were influencing the market. And when asked that question, he couldn't give a straight answer. But Dallas Fed President Kaplan, he did. So again, kudos to Steve Leisman for following up on that question, asking it directly to Fed President or Fed Chairman Powell. Okay, so taking a look at some of your questions. Um, June rate cut. You know what? Some guys are calling for a June rate cut. So we'll see how that's going to fold or unfold. The Fed is the coronavirus. Oh, okay, you guys, tough crowd, tough crowd, tough crowd. But okay, let me go quickly into that. Why 1.5 trillion? Why 1.5 trillion? He said they will not let it go below that 1.5 trillion. Basically, that's what he was saying. So right now we're looking at the excess reserves of depository institutions. This is what the banks need to keep in reserves. Where are we at today? We are at 1.462 trillion, right around that 1.5 trillion that Jerome Powell was talking about. So why is he using this number? Let's go ahead and add another chart onto this. Let's go ahead and add the Fed balance sheet. Okay, so we'll go ahead, we'll grab it here. We'll add this data series on top of this chart we have now. So let me clear this out of the way. Okay, so question for you guys. Let me bring this down a bit. Would you folks say that these two lines are correlated? Would you say that excess reserves of depository institutions are correlated with the Fed balance sheet? I would say they are. So if Jerome Powell is saying the Fed balance sheet is going to expand, you would have to also assume that the excess reserves of depository institutions are going to expand along with the balance sheet. And in my opinion, this is why Powell is saying 1.5 trillion basically is going to be the floor, because he knows as this expands and goes up, he knows that the reserves are going to expand and go up as well. He knows the reserves are going to go up. And so that's why he's, in my opinion, why he's using that 1.5 trillion as the floor, because he knows that balance sheet is going to go up and it's going to pull up the reserves with it. Um, my opinion on that after taking a look at or trying to figure out why he used that number. RR, look at that correlation. Yeah, it's pretty darn obvious. Pretty darn obvious. So that balance sheet is going to go up and it's going to pull up the reserves. That money printing is going to happen, and I do think, as someone said, in June you are going to probably see that interest rate come down a bit. I think that's pretty much what we're staring at right now. So I think most of us are on board with this. Um, let's see. Beware the eyes of March. Yeah, that is true. Someone I saw a question also. How many people have silver, stack silver, own it? I do as well. I'm more into silver than into gold. I keep some with me, and I don't keep some with me, and that's the thing. I mean, I do understand that you may have to be mobile, so you may have to have some here, have some there. Um, but the point is definitely have, and the same as when you hear fund managers, money managers tell you you need to not allocate, but you need to put some here, put some there, put some. You need to have some in different. You need to have different types of assets. It's the same with locations. You also should have some of your assets in different locations. So those things they do kind of work hand in hand. It's my opinion on it. I mean, other people may not feel that way. Some people will, but that's kind of how I see those things. But nonetheless, I mean, it does look like June. They're going to have to do something coming around June, or definitely after that April, when he's expecting things to start to naturally recede. So we'll see what's going to happen with that. So that's the old Jerome Powell. That's the new Jerome Powell. I do think the guy meant well when he got in there, but I think the job is just a job that he can't always be honest with people. And which brings us to experts. I mean, they're good to listen to, but they also can be wrong sometimes. I mean, we've heard it over and over again. Experts tell us this, experts tell us that. Sometimes they get it right, but I think majority of the time they do get it wrong. Um, and these experts, we've been hearing them looking for black swans. Some of those being, what if we have a delivery on comics? I mean, that's going to drain comics, and it's going to definitely bring a crisis in the markets. CLO market, CLO is sort of like CDOs, but revamped and brought over into the future. Fed juicing the economy and then trying to remove the punch bowl. They've tried that. They can't do it. Can't do it. Political civil unrest, maybe those are a black swan. We're seeing those also. Uh, War. We're always hearing about war. We're always hearing about oil. We're hearing about new cryptocurrencies, and now we're hearing about pandemics. So the thing is, black swans, we just never know what it might be. But I'm gonna say this: maybe we aren't supposed to be looking for a black swan. Maybe what we might want to consider is a flock of gray swans. Something in between that white and that black, because we sure do have a lot of these gray swans, right? I mean, a flock of gray swans that are here and now today may be more damaging than just one black swan. So, anyways, it's something to think about. And J. Paul, he did also talk about the uncertainties in the market and just lightly touched on the Wuhan virus.
Good afternoon, everyone. Thanks for being here. At today's meeting, my colleagues and I decided to leave our policy rate unchanged. As always, we base our decisions on our judgment of how best to achieve the goals Congress has given us: maximum employment and price stability. We believe monetary policy is well positioned to serve the American people by supporting continued economic growth, a strong job market, and a return of inflation to our symmetric 2% goal. The expansion is in its 11th year, the longest on record. Growth in household spending moderated toward the end of last year, but with a healthy job market, rising incomes, and upbeat consumer confidence, the fundamentals supporting household spending are solid. In contrast, business investment and exports remain weak, and manufacturing output has declined over the past year. Sluggish growth abroad and trade developments have been weighing on activity in these sectors. However, some of the uncertainties around trade have diminished recently, and there are some signs that global growth may be stabilizing after declining since mid-2018. Nonetheless, uncertainties about the outlook remain, including those posed by the new coronavirus.
Okay, so a gray swan for sure is this Wuhan virus. Don't know it. Maybe it's the black swan. That experts have been saying a black swan will come, but they never really knew what it was. They had a lot of ideas and opinions what it might be. So maybe let's just take our eyes off looking for that black swan and just realize all of these gray swans that are surrounding us right now. So Jay Powell said this virus is bringing uncertainty into the markets. What would be affected? Things like manufacturing in and out of China. I mean, China does supply a lot of the raw materials that other places in the world need for their manufacturing. Retail and service industries. If things aren't being made, things aren't being shipped, retail, service start to go down. Supply chains, again, we just kind of touched on that. Events and entertainment, things start to shut down. People may not be going to Disneyland. People may not be going to hotels, conventions, other events, going to the theater. Um, these things are going to take a hit as well. Transportation, we are seeing, airlines starting to come out now and say they're not going to be flying into China, or a lot of countries basically saying they're not going to be accepting flights from China unless there's some provisions that are made, or certain provinces of China anyway. So we're seeing these things, that are coming out. And that transportation, again, it's on both sides, all over the world, both sides of the ocean, all over the world, where that tourist dollar from China is not coming in, and that tourist dollar going into China is not coming in. And there's some guys who are speculating that China might be in a shortage for U.S. dollars if this continues. So we're going to see how this thing plays out. So when we looked a bit more into China, I admit I was pretty surprised to find out, China is not just a manufacturing economy. I mean, we know it's not, but it's more of a consumption economy. If China is not consuming, potential gluts form, velocity of money slows, revenues fall, markets sell off, which was why China had to, or the government had to go ahead and postpone opening the markets until today. And just take a quick look at one of the articles that came out that explains that or speaks about China frantically shutting down stock market to prevent coronavirus sell-off. This is from CCN, and this was from January 28th. And so we already know this, right? That the markets they closed it and they opened it today, and we're seeing what's happening with it. It's going down a bit. But back then, Chinese authorities have decided to suspend trading on the Shanghai and Shenzhen stock exchanges. This move comes as the Wuhan virus outbreak grows in size and severity. The government is kicking the can down the road. Investors can expect a massive correction when trade resumes Monday. And, this is why, again, markets were closed and why they were injected with all that liquidity. They're trying to stabilize the markets. And I think, it even went so far as to say they're not going to be allowing short selling, I think, for a few months. So they are really trying to stabilize the market. And we're going to have to take a look at that one because it's just so fast moving. It's hard to keep up with it. But there was one analyst, she came in and talked about China's economy on CNBC last week, and I'll go ahead and roll that clip for you.
If we think about firstly in terms of seasons, it's the Lunar New Year holiday, and so usually this is a seasonal boost to the economy through consumption. So if we also look at global trends against the trend of protectionism and populism and sort of closing borders, mobility and air traffic and air passenger traffic are completely running against that trend. And so if we look at our current economic expansion, tourism is largely driving a lot of the bulk of the economic activity, certainly the Chinese outbound tourists. So the impact on the China domestic market, other corollary markets in Europe, I think is severe.
Is it severe just in the short term, or could this have a longer lasting impact?
I'd say it's short term. If we go back to the SARS back in 2003, that lasted 6 months, roughly the same sort of time period. The difference being that back then, when China's economy was growing at 10% per annum, it was largely a manufacturing miracle. Since 2005, Beijing has been translating its economic growth into consumption-driven. So 40% of its GDP growth might be negatively impacted.
But is the consumer holding strong, even though we had seen Chinese economic growth in terms of manufacturing output and industrial production slow down? Were the Chinese consumer sort of the engine of that economy as well?
Certainly. The numbers really defy a lot of the slowdown in manufacturing activity. So Chinese international tourists spent $277 billion last year, which is an extraordinary figure. It far dwarfs the United States at $144 billion. So luxury goods companies, a third of their sales, from European counterparts are from China. So looking at, they still had significant growth, maybe going from high teens to lower teens, high single digits, but the China market is so significant.
So if the Chinese aren't traveling and the Chinese aren't spending, you're going to see a hit on luxury goods and potentially hotels and airlines and so on and so forth. But I want to come back to Contessa's question and pose it to you. Why are we so much more concerned, it would seem, about this coronavirus than we are about regular influenza that affects more and kills more?
I am not going to make that judgment. I think Contessa's and you are both asking medical questions. What I know is that
Dr.
the medical
Leisman, step up.
the medical
Paging
authorities,
Dr.
the medical and health authorities are more concerned about this. My suspicion is it has to do with the particular virality and the way that this virus is affecting people. And that's really, when you go back and you look at the history of these things, there are two things that the epidemiologists care about. morbidity and virality. Sometimes they work together, and sometimes they actually work against each other because high morbidity levels means it's hard for the thing to transmit. So those are two things you look at, and these are things that you get involved with trying to game out the cost of all this thing. If this is a particularly viral version of the flu that's very, very deadly, then you're starting to talk about more serious economic impact. So
Okay, I think I'll I'll end it there already. So yeah, the interesting part for me, what I found in this is how they were talking about manufacturing economy, consumption economy, things like that. And then we go back a few months, maybe half a year or so. Trade war was in full effect, and it we seem to think, a lot of us, I guess, seem to think that China is still more of a manufacturing economy, and you figured, okay, these tariffs are going to hurt them in a sense, and you know, then we'll able to the a trade war will be able to be renegotiated and whatnot, because they were considering the the aspect of China's manufacturing part of the GDP. And what I think a lot of people forgot or didn't realize or didn't take a hard look at was, I think China was okay with I mean, China knew the tariffs would hurt them to a point, but they also knew that they are a consumption economy and they could keep the economy going within their own borders. So I'll play this clip, which was from about 6 months ago or so, and it talks about just that.
Given trade war or trade tension and the fact that, as I said, the domestic Chinese economy is also slowing down at the same time. So the overall environment is very cautious, if I may. On the other hand, we have looked at different scenario, done some stress testing, even adopting in a worst case scenario. We are definitely not looking for a end of the world kind of scenario in China. The fact that the sheer size of the Chinese domestic economy will help China navigate through the turmoil. And in the medium and longer term view, there's still a lot of growth opportunities within China. So I just have to bear with the short term volatility, I guess.
Would you agree with the assessment of China in terms of its moves so far and what it has the potential to do in the future when it comes to the trade dispute, that they're really playing the long game here as opposed to, getting all their firepower out front to try and get a deal done? They're really sort of setting themselves up now for a difficult few years, if indeed these tariffs do continue, so that they will be able to play the long game and I suppose try and get what they want at the end of the day, no matter how long it takes.
Well, nobody has the perfect insight into the decision-making circle, but that's, as you described it, playing the long game is probably the best and only option that the Chinese government has. Bear in mind that if you look at from an economic and corporate earnings perspective, external trade is only a relatively small portion of the Chinese economy. I mean, total trade is only like 20% of the GDP, and a majority of that is actually not to the U.S. So China can afford to play the long game and play it well. And at the same time, I guess the government is trying to buy time in.
Okay, so the key point there, let me switch over to chat. Key point there, China was also depending on the internal consumption. Trade or manufacturing as a component of GDP wasn't that big of an area than perhaps U.S. had thought when they went into these trade deals. But nonetheless, I think something's going to have to give with the trade deal. I mean, either the phase one is going to be shredded, or this is going to come up in phase two, where this whole consumption economy is going to be looked at a bit tougher now, because if consumption economy slows down, then manufacturing economy is going to have to pick up the balance, or if you just look at it in a simple form, a one-to-one type of a thing. So looking at what you guys are talking about, excuse me. Let's see. Oh, you guys got a lot of comments. I thought everybody's gonna be watching the game today, but you guys are here, so appreciate that. Let's see. You know, I did it is, I guess we can say, true that there is a biological facility in Wuhan, and there is some speculation that maybe something leaked, maybe something was invented in there that leaked. And then you've also seen it go as far as to say they do find some type of HIV component in the Wuhan virus. I'm not going to go too far into this because I personally don't know, but I know these are some things, excuse me, some things that are floating around out there. So it's just to let you know that we're aware of it also. You know, we see these things as well. We're not blind to things that are going on or are being said. So we do see it as well. We do hear it. So again, just to let you know, we don't necessarily have an opinion on it because I know there's more things that need to come out, but we've heard of it. Yes, definitely heard of it. So in the words of Lee Corso, not so fast, my friend. So here we are today, understanding that surely part of China's strength is, or in the trade war, was knowing that if the U.S. puts tariff on their exports, no problem. They can simply consume products domestically. Consumption was, in a sense, China's trump card. And just a little bit about this consumption. One of these articles from let me see, QZ.com. This goes back to middle of last year. For all the hubbub about the U.S.-China trade war, trade is a fraction of China's economy. So the trade tensions between China and U.S. have gone on for a few months. Some of the world's institutions have warned of the consequences. The head of the WTO warned of the worst crisis in global trade since 1947. IMF has said full-blown trade war between the two largest economies could make the world a poorer and more dangerous place. So it's somewhat ironic that trade is, in fact, no longer the main driver of the Chinese economy. It's domestic consumption. And I'll end it there. It's really domestic consumption. And this is the part where people are worried, where if China's not able to consume domestically, it's really going to affect their economy, and that probably is going to affect the rest of the global economy. So they are a big economy, and you have to take it into account. You know what goes on there. You know it's going to affect a lot of us throughout the world. And taking a look at their GDP, this is from Statista.com. You can see that the forecast for the average share of consumption in the Chinese gross domestic product from 1995 to 2030. So right now we're at about 60%. Over half of China's GDP is from consumption. And someone who we've had on the program before, Daniel DiMartino Booth, she also weighed in on what's going on right now and consumption.
You know, people generally in times of crisis sell first, ask questions later. Maybe they're at the ask questions part today. I don't want to pounce on this moment as being a sign of a turnaround, but do you think this sell-off is justified? You could make the point that well, there are a lot of worries and unanswered questions, a lot of suspicions about how forthcoming the Chinese have been. What do you think?
Well, I think perspective and context are what are most important right now. Back when we had the SARS outbreak and we were dealing with it with a very much more secretive Chinese group of officials.
2002 and 3.
Right.
Yeah.
Chinese GDP was 4% of the global economy. Today it's 16% of the global economy. So it's quadrupled in terms of its position, its footprint in the world. So I think that markets are right to be worried. I mean, Germany's export engine still relies on all those exports to China. It's its biggest market, and we're just now starting to see signs of stabilization in Germany. And you know, kind of a lot of the enthusiasm we came into 2020 with was predicated on this idea that we were going to have this synchronized global reflation trade that followed the Phase 1 treaty being signed. So it calls into question a lot of these things because, as officials have been made known, there's a great Johns Hopkins website as well the virus is now in every single one of the 32 Chinese provinces, and I'm not sure what portion of the border at this point is open. So again, this is a large economy. It's part of the global supply chain.
Okay, excuse me. So the consumption economy is what we can call, or what I'll just call it, a double-edged sword. On one side, China's consumption economy, it does help it in things like trade wars. Um, on the other side, Wuhan virus, if the consumption economy slows down, the economy, it's going to hurt China and perhaps the rest of the world. And Daniel DiMartino Bull, she did mention SARS. So how does this Wuhan virus compare to SARS? And we're not looking at this from the medical standpoint, what happens to you physically or things like that. We're going to take a look at this from the economic standpoint. So let me grab this chart here. If you look in 2002, 2002 was about the time of SARS. Crude oil consumption, China's annual consumption was 6.6% of the global economy. I mean, as far as crude oil goes, China was taking up 6.6%. Today, 13.5%. They've doubled. Okay. Still, consumption has doubled as well. 2002, they were taking up 22.6% of the supply. They're taking almost half the supply right now. They've more than doubled since 2002. Copper, 17.8% has moved up to 53.3%. It's almost tripled. Aluminum, 16.5. We're at 57.3. So again, it's almost tripled. Nickel consumption. China consumes a lot of nickel. Over uh, half goes to China. And but I just wanted to make one thing clear. A lot of the nickel, a lot of excuse me, a lot of nickel, a lot of cobalt that are used for electric vehicle batteries, it's refined in China. So it goes into China, gets refined, and then it goes back out. So that's why that number could be pretty high. But the thing is, I'm sort of wondering now what happens, with things that are refined in China. Are they going to make it back out? I mean, with the Wuhan virus, will certain things be able to come back out of China, or will they sort of go in a glut, slow down? Yeah, I think this is going to be interesting to see. But you can see here, everything has doubled or at least tripled since 2002, which was when the SARS virus came about. In 2019, just last year, but I think we can say 2019 would resemble, let's just say, Wuhan virus. So between the two, there is a huge difference as far as China goes and consumption, and this is why I think a lot of it is going to still um, it's still going to play out, and we just don't know what it is right now, and this is why we have the question. In the U.S., it's a consumption economy, and a slowdown in China will affect the U.S. and the rest of the world. Consumption typically makes up most of the GDP for first world countries. But what the Wuhan virus is showing is that it does not take much to cripple a consumption economy, especially a debt based economy that needs to be fed by consumption. So again, this is why we're asking, if is this Wuhan virus the black swan? Well, don't know, but it's surely at least a gray swan, right? And you guys have been pretty active in the comments. Um, I've seen, uh, I mean, let's say all of these things unfold, and economies really start to get into trouble, and what happens? I mean, is this going to be something that opens the door for a new monetary system to come in if the current one we have falls apart because of something like a pandemic? Um, it's not out of the realm of possibilities, but we just don't know. We just don't know. All we can do is hope that there is a cure and things turn around, and you know. But like I say, experts can be wrong, and often they are wrong. Um, so let's see some of these comments. The main concern is just at the beginning stages due to fake statistics, manipulated China government. Yeah, that's definitely a concern. Um, we don't know if we're getting the truth, if we're getting the real numbers. But on the flip side, that also goes for Jay Powell. So, which is why these two are kind of stuck together. We're getting two sides of the coin that it's just simply getting harder and harder to believe. And both of these sides of the coin can definitely affect us all, can surely affect us all in a whole lot of different ways. So, again, continuing some of the questions here. Green Swan event. Okay. Um, Coronavirus at the height of a global meltdown. How convenient. Well, just never know. You just never know. Uh, Home search, real estate. Coronavirus has just started and we don't know real numbers. Exactly. We don't know it. Um, watch other countries over the next 30 days. Yeah, that is true because as a lot of people they went into to China, visit their family, celebrate Lunar New Year, and they've left now. They've flown back to other countries that they were previously in. They've gone back to work, catching the bus, taking the train, and whatnot. And that is the fear. If they brought that thing back to all of these different countries, which is why we're seeing the presence of the Wuhan virus in different countries starting to increase, more than likely because the migration back out of China after Lunar New Year. And, this is something we talked about that we needed to watch. It was really going to be after Lunar New Year when people go back to their various countries to go back to work and things like that. So there's a lot more to go. There's going to be a lot more things that are going to be coming down with this. Um, let's see, conscious observer. I personally think that due to the way that China is reacting to it's not. Yeah, I mean, I've even come across reports where people who have died. I've seen reports where China is saying a burial is not an option. They have to be cremated. I wish I would have saved that article, but I did come across it. I'm sure you guys can just go ahead, Google it, and you'll find it as well. So is it that severe where you can't be buried? You need to be cremated, where everything needs to be just burned away, where that virus can't survive. So what are they saying? It can still survive if a person's buried un, under the ground somewhere. Sounds almost like something nuclear, where you have to do certain things to keep it from coming back into the environment. But I did come across an article where people need to be cremated, can't be buried. So it's I don't think we're being told everything again. So again, is this the so-called black swan, gray swan? So we pulled up an article from let me see. Zero Hedge. Zero Hedge. We miss you guys on Twitter. Zero Hedge again is permanently banned on Twitter, as far as I understand. I think that's it's pretty severe to go and ban Zero Hedge. Um, anyway, this article, which was at the end of January, will coronavirus be the black swan that pops the bubble of everything in 2020? Will coronavirus be the black swan? The things we believe that are untrue, I guess, is an article here. It discusses how governments worldwide have been hiding recessionary numbers from global citizens since 2008. Consequently, with the world economy already so weak, if this coronavirus causes substantially slower economic growth rates, it could serve as the pin that finally pops the unstable bubble of everything. So, what is the coronavirus and is the media concern surrounding it justified? Coronavirus is a type of normally mild virus that causes non lethal respiratory viruses, but sometimes can be lethal, and as has been the case with the coronavirus that originated in Wuhan, China. The particular trait that makes coronavirus especially sinister, however, is that unlike its previous siblings, SARS and MERS, the Wuhan coronavirus is contagious during its asymptomatic incubation period of 1 to 14 days and therefore can be transmitted from carriers that appear to be healthy, although they already have been infected. Consequently, because its method of transmission is so stealthy, it's truly difficult to assess how many people have been infected, even though the media reports put it at the number 2 to 4,000 with 100 dead thus far. So, regarding the economy or the global reach of the Wuhan virus epidemic, it's difficult to gauge and has been proven an alleged lack of transparency on behalf of the Chinese government regarding the number of deaths that have resulted in China from this virus. Unsubstantiated reports emerged from Wuhan emergency medical facilities of doctors claiming that they had been ordered to refrain from diagnosing patients with conditions of viral pneumonia, circumstances that clouded the true extent of the human transmission rate in Wuhan, ground zero. Let me go down a bit, see what else this article had to say. So basically, we've been we haven't been told the truth of the economy since 2008, is what this article is saying, and it's leaning on the possibility or almost a fact nowadays where we're not getting the full truth from even our governments about this virus, and it just goes on to say how eventually it is going to affect the economy, but they are wondering if this is going to be that black swan that's going to happen. So again, looking at some of your comments, um, over 170,000 infected reported. BL. Hmm. I haven't seen that number, but I haven't looked for a while, so I can't give a yes or no to that. But it's quite a large number, my friend. It's a very very large number. Shanghai dropped 8%, so I guess the markets are still struggling despite what the government or PBOC is trying to do to keep the markets afloat. Um, let's see. That map is 3 days. It is 3 days old. Yes, yes, absolutely. Um, it's certainly more today. So thanks for bringing that up. Um, SCTPC next month will tell how serious it's going to be. Hopefully in control, but not looking likely. This is one to buy food and medical. Um, yeah, I think a lot of you folks have been doing it. I mean, your gold, your silver, your food, your water. I think a lot of you guys have been doing that. And I mean, imagine this. Imagine you're in a pretty wealthy area. Well, not even wealthy. You're in an area that people can buy food. They have money to buy food and whatnot, and it's a pretty populated area. And then let's say that outbreak starts where you're at. Um, and if people have that purchasing power, they can really wipe out the grocery store. And for that reason, you definitely do want to have some of that food with you. And you guys are smart. You folks know that. It's definitely a good time if you, I mean, a good time to consider. I should say good time under the circumstance. Apologize for that, but it's definitely a time to be considering having food, and having your water, because if you don't, you're gonna have to go out into the crowd, and you're gonna have to bid or possibly even posture to get that food, to get that water. So you know we've always been saying also, it's not just the things like gold and silver to store your wealth. It's also things for your health and for your survivals. And this is a bit of at the very least a wake up call where we need to make sure we have all of these things in order. So let's see. Silas Barreto, gold and silver down a little. Yeah, I found that part pretty interesting. And I think what helped to keep it down a little was the fact that the PBOC is trying to keep the markets pretty calm over in Asia. So they're not the world is not exactly seeing that panic. And so therefore they're not trying to flood into that gold and silver right now. But it's simmering. I think it can definitely shoot up at a moment's notice if this thing really starts to get worse. Um, so anyway, let me go ahead and take a look at another article where you know it really is bad timing um, for the economy. I mean, the economy is very fragile as it is. This is from the AP, Associated Press. Bad timing, new virus poses threat to fragile world economy. Let me slow down here. This should be peak season for a 12-room hotel near the train station in the Chinese industrial hub of Wuhan. Chinese New Year usually brings in plenty of travelers and delivers profits of around 3,000 per month. But the place is empty. Wuhan, the center of a deadly viral outbreak, is on lockdown. There's not a single customer, said the hotel's owner, who gave only his surname, Kui. He still has to pay rent and his utility bills instead of counting his earnings. He's expecting to lose 1,500 a month. Um, so I think we know this here where we talked a little bit about GDP since SARS and today, or 2018 anyway. So there is a big difference between now and then, where 2003, 2002, 2003 was 4%, and here it's now 16%. So we are seeing that big difference. So as the world economy is coping with an unexpectedly sharp slowdown, India, which prompted the International Monetary Fund last week to downgrade its outlook for global growth this year, coronavirus is drawing comparisons to SARS outbreak, which paralyzed the economies of China and Hong Kong for weeks in 2003. But what happens in China carries a lot more weight these days. In 2003, China accounted for 4% of global output, and now its share is 16%, according to the World Bank, which is what we just looked at here, these two numbers here, those two charts. So a slowdown in China could have sizable ripple effects across Asia and the rest of the world, given the size of China's economy and its role as the key driver of global growth in recent years. And that's the key. It's been a driver of global growth, and it's going to start to slow down now. And this is where the concern lies. Um, so let's see. Maureen Davis, sorry, just finished watching the Super Bowl. Now I can focus. How'd the game go? I don't even know. Okay, 49ers won. Okay, so is that a good thing or a bad thing for people here? I'm okay. I'm actually I kind of like both teams, so either way was fine for me. Um, let's see. Jeremy Galloway, what good is money if most of the goods stop being produced? And that's exactly the thing. What good is the money? You have to have other things outside of money. Um, and again, like we just touched on, it could be food, it could be water, um, something out of the financial system, because this financial system is going to take a hit. This is where yes, you should be in things like gold and silver to store your wealth, because when this system takes a hit, the current monetary system takes a hit, fiat takes a hit, economies take a hit, that paper money is going to go down. It's really going to go into a crisis, and that's where the gold and silver can help you. One of the things that you should be definitely should be getting. And this article talked about how it's pretty empty in China, and I'm going to try and show this. I hope it works. It can work. But there was a bus driver. I saw this on a Twitter feed where he says, I've been driving 10 years, and this is the first time that I've never picked up one passenger from start to finish. 60 stops, hour and a half journey, no one. And so this is this bus driver here. So he goes around and looks at the bus, no one there. So, I mean, I don't know. It's night. Maybe it was an early morning trip. Nobody got on the bus yet. Maybe it was his last run back to the bus depot. But, he's saying that in 10 years, he's been driving that bus, and it's the first time he's never picked up anyone from start to finish. 60 stops. 60 stops. Wuhan virus may or may not be that black swan, but it's certainly a gray swan, and we all know there are many gray swans around us right now in the markets. But the point is, many people, experts, pundits, people like me on YouTube, we're not always going to be right. Okay, we're not always going to be right, and the reality is that most of us will be wrong. Experts, analysts cannot always see things such as the Wuhan virus, and will almost never have the timing correct. Never going to have that timing correct. Unexpected things, they're going to pop up. Unattended things will surely rise up. We simply do not know the timing of everything, but nonetheless, we know everything has a time. This is precisely the reason we all need to have our insurance, our hedge. We got to have that gold and silver, understand the purpose of that gold and silver. I'm not trying to, trivialize things here. This is the big thing going on in the world, but in your own personal space, you need to do the things that will help you. And a lot of times, like I say, experts get it wrong. I myself may even get it wrong. We all get it wrong. And the thing is, when we get it wrong, all these experts get it wrong. Who suffers? We all suffer. With people who listen to economies doing great, people who listen to Jerome Powell, no worries, it's under control. People who listen to, uh, let's say, a government saying, don't worry, Wuhan virus is under control. We get hurt. You and me, we get hurt. So this is why we have to take care of what we can take care of. Gold and silver is it's a part of it. Food, definitely. Water, definitely. All of these things are a part of it. And I'm going to say this because I don't hear anyone really talking about it. Remember AIG back in 2008? It insured the CDOs, and CDOs went bust. AIG needed a bailout. Otherwise, the whole system was going to fall. If the Wuhan virus spreads more, who pays for all the medical bills? Perhaps insurance companies. And herein lies another black swan no one is talking about. You get sick, you're going to go to the doctor, you got to pay your bills. If you end up in the hospital, you got to pay your bills. Who helps out with that? The insurance companies. Can imagine if it's a pandemic, a lot of people need to heal up. Insurance companies, I don't think they're going to be able to handle it. I really don't think so. So, is this the other thing? Another gray swan, at least right now, I would suspect our insurance companies. Surely they must be getting concerned with what's going on because if you're paying your insurance premiums, you get sick, you expect that insurance company to pay out and take care of what they said they would take care of. So I'm concerned about these insurance companies being able to weather the storm, weather the storm as well. Um, so let's see. Uh, 949 There's another virus brewing in Malaysia. Nipah virus coming soon. Nipah virus. I've heard of it. I haven't looked too much into it. Um, not a doctor, not a doctor, but again, gray swans. They're just lining up all over the place, and I think if enough gray swans start to surround us, that could do more damage than just that one black swan that experts for years have been telling us is going to come about. Um, let's see. Rolf Steiner, someone said U.S. citizens have $200 saved, so that should do it. I've seen reports where average person in the U.S., if there were an emergency, they had to come out with $400 or $500. A good percentage of the country wouldn't be able to. So again, all the more important our reliance on insurance. So I'm not so sure about this. If a pandemic does come into play, I don't think insurance companies are going to make it, and this is something I don't see or hear much guys talking about. So let's pay attention to that. Um, so pretty much that's it for what I wanted to present with you guys. I'll go through a few comments and then let you get your sleep or let you work through your hangover from the Super Bowl or let you get back to work if you're in Asia. A couple more things. Yagi one, I never expect insurance to take care of what they are supposed to. They seem to have an excuse quite often. Quite often. Let's see. Some stack silver, I stack fires. Okay. Best stock in Great Depression was a gold mining company, hands down. Yeah, I think mining stocks they have a really good chance to push forward. But again, mining stocks, you're really buying the management. You're not buying the gold. You're not buying the silver. You're buying management of these companies. So it's something you really got to do your homework on, for sure. Um, and I think we're going to be talking to Frank Holmes sometimes in the future, and he's going to talk a little bit about that as well. Um, this week, I think we're going to be releasing Ken Lewis from AppNext. So we'll be releasing an interview with him. And he has some pretty interesting things to say. You know, uh, some might say, why'd you interview a competitor and whatnot? Well, the thing is, competitor, not entirely. If you Because we're in Singapore, our base is more people who want to buy and store in Singapore. So if people want to buy in the U.S. and keep it in the U.S., that's a little bit of a different market from what we do. And but really and truly, the point being, I personally, even though I do work for a silver and gold company, Silver Bullion, over in Singapore, I personally, I just say buy it. If you buy it from somewhere else, just buy it. Buy it and hold it if you can. And if you do see a reason to store it outside of your jurisdiction in a safer jurisdiction, we're here for you. This is what we do. We know how to do it, and we do it pretty well. So a little bit of a different market, but just be sure to have it. That's only one component. There's so many different components that you need to do to take care of yourself, your family, obviously your health and your wealth. So try to take a look at it as best you can. A lot of it might seem foreign to a lot of you, but you know we're at a point right now, we aren't being given the truth in news. And definitely not being given everything we need to know from governments, from central banks, and you can't rely 100% on what they tell you. You only can 100% rely on yourself, and your family is relying on you as well. This is why we say be a blessing, not a burden. A few more comments before I head out. Um, let's see. Uh, BM, there may be other. Sorry, can't make out that word. But mines will still have tremendous, stupendous value. Why you ask? Because they're digging it out of the ground. Okay, not sure. Follow down. Sorry about that. Miguel Aguera, silver kills vampires. Yeah, well, it does more than that. I mean, it's one of the reasons why silver is such a it is a sought after metal as far as the medical industry goes. I once read a report, this was years ago, where silver does kill every single cell bacteria that it comes into contact with. This was maybe 5, 6, 7 years ago. I read this article. It was coming out of UCLA, University of California, Los Angeles. And but that's bacteria. I can't speak on virus because that article only spoke about bacterias, but silver does have medical qualities that maybe can help play a role in finding some type of a cure. Who knows, right? Okay, so let's see. Jim, did you know that in the UK we can't hunt swans because apparently the Queen owns all the swans as well as a fifth of the landmass on Earth? Not bad. Okay, Jim, we'll give you that one. We'll give that one the 5 minutes, 5 minutes of fame. Okay, I'm sure people will have a. There is some truth in there, but I'm sure people will have a good laugh with that as well. Let's see. Uh, BL, yeah, a lot of foreign students in the U.S. A lot are from China. I've unfortunately been reading reports as well that a lot of universities have been taking money from officials back in China. So again, something we got to keep an eye on, right? I mean, there's news that are, we can 50% believe, 10% believe, but hard to find news that 100% we can believe anymore. But let's just hope people get better. Let's hope that a cure does come. And like I say, we're all in this, we're all in the same boat together. And we got to take care of ourselves, take care of each other, be that blessing and not that burden. So I'm going to be heading out. Uh, I guess I'll take more medicine. Still got this cough, but you guys take care. You take care of each other. Be good to each other. Sometimes these comments, man, you guys really go after each other, huh? But be good to each other. Try to be anyway. And again, just you got to saddle up. You really got to saddle up for what's coming ahead. And a lot of times you don't know what's coming ahead, and this is where you got to silver up. You know, have that silver, have that gold. These things are going to help you in a lot of different ways, and pay attention to what's going on around you. So with that, I'll see you guys next week, hopefully without a cough. You guys take care, and hope your team won. Just take care of each other. See you next week.